Welcome everyone. Today I talk about how I use my side hustle as a Uber and Lyft driver to earn $5,000 virtually tax free. I say virtually because there were some extra costs, but a lot of the income was written off to basically arrive at a net zero tax on those earnings I did. And I hope you find this useful and this will help you in your future endeavors. So in our example, it can be anything. In this case, it was doing some Uber and Lyft driving, maybe 2 nights a week, 3 hours each time. And what that did was allow me to not burn out, because that's important too. So a few nights that I usually don't do much, I'm sitting at home, I got out there, got to talk to people and earn. And the apps do an excellent job of tracking when you're driving, where you're going. So it turns out half of my driving was for the side hustle, and the other half would have been personal. So that made my taxes very easy because any expenses I can allocate half of the regular expenses and put them into the business. And the biggest one you'll have is when you own a vehicle in this situation is depreciation. We'll go a little bit more into that before we get into the numbers. The number example is coming up. So please stay tuned for that. That is the price of the car, the price that you pay for the car. The next largest are going to be things like insurance, gas, maintenance. So again, you know what? If you have a side hustle, please tell us in the comments below. I would love to know what it is and see what else is out there. So let's review depreciation, because this is what's bringing us our biggest tax refund. It's something that destroys value. In a sense, if you buy a vehicle, they've said it's a depreciating asset. But guess what? In a business, it's different. You get to claw back some of the money you spent that you normally wouldn't have been able to bring back. You can deduct part of what you paid on that vehicle against the income you're earning in this business. So if I, in this situation, paid $30,000 for my car, and I think it's going to last 5 years, that's kind of like having a $500 a month or $6,000 a year cost of owning that car. I mean, the cars last longer, but we're using this for simplicity. Let's throw in the other costs. There's car insurance. Where I live, it gets very expensive, anywhere from $2,000 to $4,000 a year, depending on your experience, driving history, your age, repairs, and of course, gas. So let's say you run up about $10,000 of costs, where with all that, a couple of thousand in gas, 4,000 insurance, a couple of big repairs. So for 50% business use, like we calculated in the previous slide, that would save $5,000 of expenses, because I also bought snow tires with rims. That got expensive. It was a new vehicle in my situation. Won't have that cost every year, but guess what? It's a write-off there. So we're actually going to exclude gas too, because at the end of the day, when you do rideshare, your business expense is, your gas expense actually goes up, because the more you drive, the more you're obviously paying, and we all know what prices are. So again, if you like what we're talking about here, give us a like, and that'll let us know that what we're doing actually resonates. So on my tax returns, here's a number example. What it would look like. Remember, I have a regular 9 to 5 job, but my extra rideshare earnings this year were $5,000. It's electronically deposited, but we're going to call it cash earnings, because we're not looking at the end of the table stuff, because you don't need to do that. So guess what? We calculated business expenses, $5,000. Those were previously personal expenses, which I would have never had the ability to write off against my income. But in this case, because it's directly related to the vehicle, which is the main source of business, we can claw back some of the money we spent. So my net business income is ultimately zero on top of my regular income, so which gets its normal tax deductions. But what's happened here is I've added in I have my employment income, but I had enough deductions early enough in the life of the vehicle to basically have that as tax-free money, and learn a few things as well. If you like what you hear, like what you see, please subscribe. It means a lot to us to grow the channel. And we're going to review the assumptions, because this is what's important here. I'm not saying go buy a car for a rideshare business. I just happen to have recently bought one, and that was what I spent, about $30,000. So even without this hustle, I would have bought the car regardless. So I would have spent that money. The hustle actually allowed me to recoup a lot of the costs. How often do you get to write off, if I do it for 5 years, potentially the full value of the car, right? This $30,000 was going to be spent regardless, and I am emphasizing that part of it as well. Maybe this does add a little bit more mileage to my car, but it makes my next vehicle also easier to get. Or the longer this vehicle lasts, the benefits are there even longer. So the biggest takeaway is we want to get multiple income streams because it's not passive yet, but maybe the earnings I get from this business will allow me to find a passive income stream. But if I want to build wealth, it's a marathon, it's not a sprint. I have to do these things one step at a time. You hear about people having 6, 7 streams of income. This was just my second stream. It's a part-time job. So you start small, you build from there. But also what it's doing is allowing me to bring back some extra cash that I may have already spent and reduce my tax bill. That's still part of the second job there, but normally what the situation is where I live, every state and every province will be different, but currently you cannot deduct the following personal expenses: motor vehicle expenses, which is the purchase price, the insurance, the repairs, the gas, the maintenance, even cell phone. Canada has the highest cell phone prices in the world. And guess what? When you're a rideshare driver, you are using your cell phone for business purposes. So you can probably get a deduction there, but it's probably so small that it might not even be worth tracking. But it is an option. So we hope you found this very useful here, and come back for more in the future.